There's this invisible financial plumbing that connects three of the biggest forces shaping our world right now. You've got the explosion of private markets, the kind of wild west of crypto finance, and the all-out global race for AI supremacy. We're going to pull back the curtain on how they're all linked, and it really all starts with one simple question. Why does it feel like today's most exciting, fastest-growing companies are doing everything they can to stay private for as long as possible? I mean, the traditional dream, right? Ringing that bell for the IPO, the initial public offering? Well, that dream seems to be fading. Let's dig into why. So what's actually happening here? Look at this chart. Back in the dot-com boom of '99 and 2000, you see hundreds of companies just rushing to go public. It was a frenzy. But then, look at the years since. Yeah, there are a few spikes, but the trend is undeniable. The IPO pipeline has slowed to a crawl. This isn't just a blip on the radar, it's a huge shift in how giant companies get built and funded. And here's what that shift really looks like. Back in the late 90s, a company would go public in about 6 years on average. Fast forward to 2017, and that timeline has almost doubled to 11 years. Think about that. Today's biggest innovators are keeping trillions of dollars in value locked away from you and me, away from the public markets, for over a decade. So, what's causing this massive delay? Well, it's really a mix of some pretty powerful deterrents. After some major financial scandals, new regulations like Sarbanes-Oxley and Dodd-Frank came in, and they made being a public company incredibly expensive and complicated. At the same time, the stock exchanges themselves raised their standards, making it tougher to even get on the list. And, beyond the money, founders just don't want to give up control, spill all their company secrets, and live under the constant pressure of hitting those quarterly earning reports. So if they're not doing an IPO, what are they doing? Well, this reluctance created a vacuum. And Wall Street, being Wall Street, created a brand new market to fill it. A huge, but mostly invisible, financial world has popped up to provide that cash, but without all the headaches of going public. Welcome to the world of secondary markets. The idea is actually pretty simple. Instead of a company selling brand new shares to the public, these markets let the existing shareholders, we're talking early employees with stock options or the venture capitalists who got in on the ground floor, sell their private shares to a hand-picked group of big money institutional buyers. It's a way to get paid without the whole company having to ring the opening bell. Okay, so let's walk through how this really works. Let's say you're an early engineer at the next big thing. You've got valuable stock, but it's totally illiquid. It's just paper, really, until the company goes public, which could be years away. With a secondary market, you can put your hand up and say you want to sell. A special platform then acts like a matchmaker, connecting you with, say, a huge pension fund that wants to buy into your company before it ever IPOs. The deal is done behind closed doors, you get your money, and the company stays private. And I want to be clear, this is not some shady back alley operation. We're talking about major, sophisticated platforms. Some are even run by the giants of the public markets, like NASDAQ itself. Companies like Forge Global, EquityZen, and Carta have built this whole robust system to handle these multi-billion-dollar deals securely. And the scale here is just mind-blowing. This isn't some tiny niche corner of finance. In just the first 6 months of 2018, the NASDAQ private market alone handled over $10 billion in these kinds of deals. That is a staggering amount of money changing hands completely outside of the public stock market. The impact of this is huge. For founders, for employees, for those early investors, this is a total game changer. It means getting cash is no longer tied to a public exit. It lets companies stay private longer, focus on growing for the long haul, and still reward the people who helped build the business. But believe it or not, this is just the beginning of the story. Because if these private markets were the first big evolution in this hidden financial world, the next giant leap is happening as we speak, and it's happening on the blockchain. You see, this same basic ideas, creating liquidity, matching buyers and sellers, are now being put on steroids by something called decentralized finance, or DeFi. We're talking about a whole new financial system being built on blockchain technology. And for the big institutional players, the goal is to cut out even more of the human element and make markets run at the speed of code. Now, the secret sauce here is the automated market maker, or AMM.
Forget the old way of doing things where you have to match one specific buyer with one specific seller. Instead, an AMM uses smart contracts, which are basically just self-executing bits of code on a blockchain, to create these giant pools of assets. They're called liquidity pools. A good way to think of it is like one of those currency exchange kiosks at the airport. You don't wait for another person who wants to swap dollars for euros. You just trade directly with the kiosk's supply. You're trading against the pool. And the difference is just night and day. On one hand, you've got human brokers and order books. On the other, you've got algorithms and code. You go from a centralized company in control to a decentralized protocol that nobody owns. And instead of waiting days for a trade to settle during market hours, you get near-instant settlement 24/7. It's a leap from a system run by people to one run by code that literally never sleeps. And this isn't just some theory for the future. A new platform called BisonFi, built on the super-fast Solana blockchain, is a perfect real-world example. It's not for you and me, it's designed from the ground up for institutional traders to run really complex strategies. And look who's backing it. Huge players from both traditional finance and crypto, like Jump and Galaxy. The pros are building professional-grade tools for this new frontier. Okay, so we have these new, incredibly efficient financial engines. But an engine is only as important as the vehicle it's powering. And right now, these hidden markets are fueling the single biggest, highest-stakes technology race of our generation. This is where our story zooms out from Wall Street all the way to geopolitics. Both the private markets we talked about and this emerging DeFi infrastructure, at the end of the day, are about one thing: getting capital to innovation more efficiently than ever before. And there is no bigger area of innovation on the planet right now than artificial intelligence. This financial plumbing is directly funding the companies on the front lines of the tech rivalry between the US and China. And on one absolutely critical front, China is already way ahead. In 2023, China installed fully half of all the world's new industrial robots. Half! This isn't just about making cars anymore. This is about building the physical hardware for what's called embodied AI. Basically, giving artificial intelligence a physical body so it can interact with the real world. So this really breaks down the two completely different strategies that are at play. You have the US, which is mostly focused on the brain, the software, the large language models, and it's all funded by that dynamic venture capital and private market ecosystem we talked about, with a huge advantage in chip design. Then you have China, which is running a state-led industrial policy focused on the body, robotics, and hardware. And it's using its unbelievable manufacturing scale to build AI into the physical world. And here is the jaw-dropping result of that manufacturing advantage. A Chinese company called Unitree can sell a sophisticated walk-in humanoid robot for just $16,000. To give you some perspective, that is a tiny fraction of what US competitors like Tesla's Optimus are expected to cost. That massive cost advantage means they can be deployed everywhere, learning from the real world at a rapid pace. What this all adds up to is China building its own completely self-contained AI ecosystem, or stack. It's not just one piece of tech. It's the combination of massive government investment funds, the world's biggest manufacturing base, and a top-down national strategy to weave AI into every single part of their economy and society. And the experts are really taking notice. This isn't just me speculating. A recent report citing a US expert puts it bluntly: there is now a clear path for China to overtake the United States in the race for AI dominance. The stakes really could not be higher. Which brings us right back to where we started. We've seen how these hidden markets are rewriting the rules of finance and fueling innovation at an incredible speed. But it all leads to this one final critical question. Is the future going to be defined by the decentralized, venture-backed model of the West, or by the centralized, state-driven industrial policy of the East? The answer is going to determine a lot more than just the future of tech. It's going to define the balance of global power itself.
Thanks for watching. Don't forget to like, subscribe, and share. It really helps the channel grow. See you in the next video.